Hey traders, welcome to Charts and Coffee as we prepare for the open. Hope everyone's having a very good morning. Got to take a look at a couple things before we get to the charts. If you do have any questions, as always, phone lines are open for your requests. Feel free to type in whatever question you've got. We'll take a look at what is on the chart. All right. So first off, we're going to jump on over to the calendar. Now, first week of the month, we always have non-farm, so we know that's coming. It's around the corner, and typically we know the countdown to that kicks off with the ADP release on Wednesday. But we have another little thing happening on Wednesday at 10 a.m. And I don't mean the jolts, which is usually a pretty big deal too. When I look at employment data, I'm definitely looking at what it is that non-farm is going to say, but also the job openings, which are the jolts. And then we have the ongoing initial claims. But ultimately, this week is going to be ruled by not just what non-farm has to say, but also about what Jerome Powell has to say in his 2 days of testimony to the Senate Finance, the Banking Committee, whatever that is. I think they used to call that Humphrey Hawkins. They don't call that anymore. I don't know who Humphrey or Hawkins insulted, but they don't call that anymore. So we have the 2 days coming up. And clearly, if we're going to see any shifts on expectations for rate cuts, right? That's the conversation, gang. When and by how much? Now, somebody asked me, Rog, if you look out to December, where are rates sitting? And rates are sitting from an expectation standpoint based on what the Fed fund futures are doing. Rates are sitting with an expectation of being somewhere between 4.5 to 4.75%, or as low as 4 to 4.25. Now, that matters because we're at 5.25 to 5.5% right now. So this is lower. But how many cuts do we get? Do we get a full percentage point? Do we get 3/4 of a point? And that's been mostly the expectation, either 3/4 point cuts or 4/4 point cuts. And that's where we would end up in December. Now, if Powell thinks this is too dovish, if Powell thinks that we collectively, traders and investors, are expecting too much from the Federal Reserve, every speaking engagement he has, certainly something like Wednesday and Thursday this week, is an opportunity to set us straight. It's an opportunity to use his words and get us to align to what they're doing. Now, here's what's so cool. Powell and company can, in real time or at slowest, day by day, look at these target rate probabilities and say, oh, this is what the marketplace is expecting. Believe me, they know where these are sitting. So when you look at June, there is actually less and less likelihood that we're going to be it's not super probabilistic, because that would be at 80%, but it is less and less likely that we're still going to be at 5.25 to 5.5. We should at that point be 1, if not 2/4 point cuts into where we should be on the meeting. So either we'll get a 1/4 point in May, or we'll get the 1/4 point in June. It's less likely we will get a 1/4 point in May and a 1/4 point in June. Gang, this is data. Please, please, please. It'd be really easy for me to turn the mic on here and just blather on about whatever I think is going to happen, but we don't have to do that. And frankly, no one cares what we think. Right? I think a lot of times that idea that I see something the rest of the market doesn't see is such an appealing thing, right? But it's usually not true. We are counterpunchers. We don't have to be predictors, right? Thankfully, our job is not to see into the future, which, by the way, you can't. So what we do is we look at what we're expecting, right? And then we look at the way in which the words of the Federal Reserve, most definitely Jerome Powell, line up with those expectations. So these columns are likely to move. And I can see where we are now, and we'll be able to see where we are come the end of his testimony on Wednesday, which is the more volatile of the 2 days. And then Thursday. Usually Thursday, he'll course correct whatever didn't land the way he wanted it to on Wednesday. So he gets the bat cleanup on Thursday. And then we get non-farm, right? Now, Jerome knows whatever non-farm is going to be. I mean, let's be real. He knows, generally speaking, what that data is going to be. So anything we hear him say on Wednesday and Thursday are likely going to be echoed in the data on Friday. All right, so that's it. That's how we look at macro, and that's how we set expectations. And unless Jerome wants to create a crash a la Q1 2019, he is going to either straighten us out by realigning these with his words. We will then start to adjust our expectations, or he's going to leave them be. And again, there is just as much to be gleaned from him saying nothing in terms of moving these levels around as there is him saying something and moving these things around. So please remember, that is what is expected. And I like to remind everybody, some of you all remember as well, in Q4 of 2018, he did not pause when expectations were for the Federal Reserve to pause. He defied the expectations. And for those of you that remember, 2019 Q1 was one of the swiftest sell-offs we had seen up until a year later with the pandemic. So believe me, he knows what happens if he doesn't follow what expectations are and adjust them along the way. And that's the big picture here as we go into 2 days of Powell and then the macroeconomic impact of non-farm on Friday. All right, so as always, gang, relying on the data, trading what we see, not predicting, and simply reacting to what's happening on our charts. So let's get to it. What do we have this morning? You know, when I look at equities moving lower, look, we know what goes up and comes down, goes up, comes down. Just this outlook of today is down doesn't really tell us anything, right? If I were to say, hey, we're down from yesterday's close, that's a fact, right? But what are the opportunities in the context of the S&P or even the NASDAQ or even the Dow? What's the context of today's movement? Is it breaking the trend? Hardly. Is it a significant move breaking near-term support levels that have held, say, something along the lines of 50, 70 on the S&P futures? Hardly. This is simply one of many, many, many opportunities throughout 2024 that we have had that could set up a buy the dip, right? I'm not talking about something we're going to try doing new now, right? We're sticking with what we've always had on these charts. We're sticking with the zones of volatility, and we're sticking with the structure, which is up, bullish. Let's buy the volatility support, and then let's take advantage of what has been happening, which is we tend to punch up to higher highs. Same thing with the NAS, and even the Dow has started to join the party. Although I will say I do like the structure of industrials and financials better than I like the Dow. Now, financials moving higher, industrials moving higher will benefit bullishly the Dow, but these two are stronger than the index. And sometimes the smaller group of stocks, in this case, financials and industrials, think JP Morgan, Berkshire Hathaway, Bank of America, Wells Fargo, our beloved American Express on financials. And then when it comes to industrials, CAT, Uber, our beloved GE, right? So that's what's moving industrial. So sometimes it's better to ask yourself, where is the relative performance, not just at a stock level, but at a sector level, and play that in lieu of the trend on the index, right? We can grab the best part of the index and say, look, all the components weighted within the industrials are not going higher in the same way. Certain ones are. So why not hitch our wagon, so to speak, to that? All right. So let's get to the questions. As always, for those of you that may not know where to find me, you can find us over at, I say us, me, the Lorna Bot, in our community over at the Sector Secrets Mastery, as we like to call it, the Sector Food Dojo. You can find us Monday through Friday, trading, day trading, swing trading. And today we've got our portfolio position session and very active room. So looking forward to seeing y'all there. You can find that at sectorsecrets.com. All right, so let's get to it. Sam asks, oil refiners. I have no idea. So Sam, to project out 1 to 3 weeks isn't something that I actually believe anyone can do unless you're talking about there being an event that's going to be happening in 1 to 3 weeks. So I don't look at it in that time horizon. What I do want to look at is, are the refiners moving higher? Where is XLE, Let's start with that. XLE is in a very fresh transition from the bearish to the bullish hemisphere. Exxon has gone into green trend, green momentum. MPC is, VLO is, as well as is PXD and HES. So take a look at the colors of the labels on these charts, and exactly, MPC and VLO, beautiful. So I want to buy dips there, right? And if it's a daily time frame setup in a trend, I want to give myself as much time as I can reasonably give it in terms of, at least this third Friday expiration, if not the next. Yeah, so I want to give myself time. As far as energy goes, if I contrast that with the OIH, now this is your oil services. This is your Schlumberger, your Halliburton dominated sector. Not as good looking. And by the way, not every stock in this group is going to have a liquid option chain. So while the stock might look good, while there might be decent shares traded per day, it doesn't necessarily mean there's going to be open interest at the strikes that we want to buy. Let's take a look at the third sector I tend to look at, and this is oil and gas explorer. So yes, crude oil and natural gas. And you can see MPC, VLO. So you might say, all right, Rog, there are a number of names, and it seems that the names that overlap with XOP, oil and gas explorers, and XLE, the energy sector, seem to be doing pretty well. But remember, Exxon's there too. So for sure, MPC, VLO look quite good. And then make sure you have the liquidity there. So I like these to the long side. I'm not going to say for how long, because nobody knows how long they could go. Why would I limit myself to 1 to 3 weeks? Or why would I expect that much follow through? No one can predict how long something is going to happen. However, we can work the probability of the uptrend continuing, and I'll focus on buy the dip, hit my target, and let the market very organically, target by target by target, scale me out. And that's the way that I look at these trends, and two very nice trends that you've mentioned there. All right. Next up is, let's go take a look at, let's see, D is asking about a lot. All right, let's go take a peek. All right. Gold. It's making higher highs. I mean, there's nothing to say other than it's making higher highs. All right. What do I see? It's moving up. Where are the opportunities, right? Daily price movement range. This is gold is just taken off out of the cannon, right? It's been just launched. Be careful with this one because gold can be very volatile. But daily price movement range makes perfect sense, or day trade it if you want to keep with a shorter time horizon. Silver's following suit, but not in a trend. And bonds are not, what happened here? All right. Bonds are not in a trend yet, and they're not trading solidly above the 200 yet, although today's move, to your point, looking at ZB makes sense because we are getting above the 120 handle. I like this a lot. This indicates lower yields. Lower yields to some degree are a reflection of the Federal Reserve cutting rates at some point this year. I'm not really interested in utilities, D, not really interested in utilities because, look, if there's risk appetite, I'm not necessarily going to focus on a defensive corner of the market. And please, it's a big candle. That's all that it is. It's a big candle. So good list. Interesting things happening. The question is, which ones are in trends? Let's prioritize those, right? Which ones are likely to continue as opposed to just having one big candle. We'll keep an eye on the big candle and see if it can continue, right? All right, good stuff. Next up is, let's see. iPod asks, in a probabilistic move up in the market, or a parabolic move, sorry. Coffee is not kicked in yet. In a parabolic move up in the market, do I resign myself to not participating in the initial move down? Depends on the structure, right? Depends on the structure. Is that move, you said parabolic move up, so you're talking about fading the strength? No, I have no interest in that unless, look, it's all structure. So the parabolic move and trying to take advantage of the move lower, Hey, I don't know how much it's going to be, 3 to 5%. Nobody knows, right? Nobody knows. So everything is structure. Everything is structure. So if the move higher is an overbought trigger in a non-trending market, that might be useful. If it's a move higher in an uptrend, there's no way I'm going to short that. How many folks have tried to short the NASDAQ, right? And every now and then they'll get the day where it pulls back, or a handful of days that it pulls back. And yet the overall move is up, right? The path of least resistance is quite literally the path of least resistance. So I guess the bottom line is no, no, that is not how I trade. I'm sure some people like to pick tops, but all I'm going to say is just make sure if you are trying to take advantage of exhaustion, it's exhaustion, that it's a sideways market that's reached a ceiling as opposed to an uptrend that's just continuing to move higher. Because remember, for every, let's just use something ridiculous this year. Is this one of those stocks that I'm going to look for week in and week out? No, this is a stock having a move. It's tripled its value. How many folks thought any one of these parabolic moves was it? And how many times were they wrong before they finally got the move on the 16th? And so that's where I say, was the parabolic move from 420 to 800? That's a heck of a move. Or was it the move on the 14th or the 15th, right? So the issue with that is, how do we know it's the top? And I guess my recommendation is don't guess at the top in a trend. And if we get the overbought read, great. All right. So no, I guess the simple answer is no, but that's why. iPod, that's why. All right. Apple. What are my thoughts on Apple? Leave it alone. Yeah, leave it alone. That's really my thought. So of all the things that I could focus on, I don't think Apple is going to be one of them, right? Apple is going to be one of those names that, like Tesla, are underperforming. So what I really try to make sure I'm doing is not thinking about something like Apple, and instead asking myself, is there opportunity in Microsoft? Is there opportunity in Meta? Is there opportunity in, and not even just tech, is there opportunity in financials, right? What's moving higher with the broader averages? That's always going to be what I come back to, my friends. So is Apple moving with the broader averages? Is Apple moving with the sector? Do I have index sector stock alignment? And if I don't, I think the important thing is to remember that not everything is going to be tradable, and not everything is going to be moving in a way that's probable. And to me, anything moving lower is in a tricky space, because most of the indices and the important heavily weighted sectors are moving higher. As far as consumer staples go, it's been something that we have looked at quite a bit, but the more risk appetite we see, consumer staples hasn't really been disappointing. It's been pretty bullish. So to buy dips on XLP is fine. Procter & Gamble, Costco, Walmart, Colgate, Target. Yeah. So that's what I would focus on. If you're not going to buy, if there's no liquidity, for example, in the XLP, and instead you want to take advantage of an individual stock that's moving like the broader sector. And in this case, XLP has no significant weighting in the broader averages. Dow, S&P, NAS, they're not weighted with a bunch of these stocks. So this is kind of doing its own thing. Even though it's generally viewed as being defensive, it's in an uptrend. So do I want to buy Coke? See, that's where we say no Coke, no Pepsi, no Mondelez, no Philip Morris, no Altria, no Monster, right? We'll focus on where the sector is up and the stocks are moving like it. So that's definitely how I want to view that, right? That's the way I typically like to think about that alignment of probability, right? The indices are going up. If the sectors are going up, which stocks are participating. And by the way, gang, we get paid on follow through, right? We get paid on follow through. Where is follow through likely to be best? Where that alignment of probability, index, sector, stock is waiting for us. So as always, gang, thank you so much. Great questions. I appreciate it. As always, I love the inquisitive nature before 9:30, right? Everyone's awake. Everyone's ready to caffeinate and dominate. Asking and answering questions is a process of thinking. So I always ask myself, am I asking the kind of questions that are going to lead to follow through, that are going to lead to the best types of entries that are in line with what the market is doing? Not what I'd like it to do, but what is it doing right now? So thank you so much. I'll see you all tomorrow, same time, same station. Be good to each other, gang.